Let's talk about why gold is suddenly everywhere. If you've been paying attention lately, you've probably noticed that gold is dominating conversations, headlines, and even dinner table debates. It's not just financial experts or investors. Everyone seems to have an opinion about gold right now. Everyone, from your neighbor to the news, says, "Buy gold, it's going to the moon." Social media is buzzing with stories of people cashing in, and news anchors are breathlessly reporting every uptick in the price. It's easy to get swept up in the excitement. People are pouring their savings into this shiny metal, driven by fear and uncertainty in the global economy. With inflation rising, stock markets swinging wildly, and talk of recession in the air, gold feels like a safe haven, a way to protect what you've worked so hard to earn. Gold feels safe, tangible, and real when everything else seems shaky. Unlike digital assets or paper money, you can actually hold gold in your hand. That physical presence gives people comfort, especially when the world feels unpredictable. But here's the truth. Following the crowd without understanding why is a huge mistake. Just because everyone is talking about gold doesn't mean it's the right move for you. Hype can be dangerous, especially when it clouds your judgment and pushes you to act out of fear. High prices today don't guarantee higher prices tomorrow. In fact, gold's value can swing dramatically, and history is full of examples where people bought at the peak, only to watch prices fall. We need to break down what's really happening, what it means for your money, and the risks no one talks about. There's more to gold than just shiny bars and coins. There are complex forces at work, from global politics to central bank decisions. This is about your financial security, not just hype. Your savings, your future, and your peace of mind are on the line. It's important to look past the headlines and understand what gold can and can't do for you. We'll look at the global picture, ways to invest in gold, and the hidden dangers behind the headlines. From physical gold to ETFs and mining stocks, there are many options, each with their own pros and cons. Before you buy, you need to understand the market forces at play. What's driving prices up? What could send them down? Are you prepared for the risks as well as the rewards? You wouldn't buy a house without an inspection. Don't invest in gold blindly. Do your homework, ask questions, and make sure you know exactly what you're getting into. The current gold frenzy can cloud your judgment. When everyone is shouting about gold, it's easy to lose sight of your own goals and risk tolerance. Don't let fear or FOMO drive your decisions. My goal is to give you the clarity to make a smart, informed decision, not just follow the herd. By the end of this, you'll know what questions to ask, what risks to watch for, and whether gold really fits into your financial plan. Let's get started. The world economy in 2025 is on edge. Growth is slowing, companies are earning less, and job security is fading. This instability has investors searching for a safe place for their money. Stocks feel risky, and cash loses value to inflation. Enter gold, a store of value for centuries, immune to government printing and inflation. Investors are moving money out of risky assets and into gold, driven by fear of loss. Gold's current popularity is all about wealth preservation, not quick profits. Let's dig into why gold is suddenly grabbing headlines and why it's often called a safe haven in times of global uncertainty. When the world gets nervous, whether it's due to economic slowdowns, political tensions, or unexpected crises, investors start looking for assets that can hold their value. Gold has played this role for centuries, acting as a kind of financial insurance policy when everything else feels shaky. So, why are gold prices moving the way they are right now? It's not just random luck. There are clear forces at work behind the scenes, pushing gold higher and higher. Two big factors are driving the action: interest rates and the strength of the US dollar. These two levers have a huge impact on how investors view gold. Right now, the Federal Reserve is considering cutting interest rates to help the economy weather some tough times. When the Fed signals it might lower rates, it's a sign that economic growth is slowing or that risks are rising. Lower rates mean that traditional savings accounts and government bonds offer less reward. Suddenly gold, which doesn't pay interest but also doesn't lose value to inflation as easily, starts to look a lot more attractive to investors searching for stability. And when interest rates drop, the US dollar usually weakens. That's because investors can get better returns elsewhere, so they move their money out of dollars, making it less valuable. Since gold is priced in dollars, a weaker dollar means gold becomes cheaper for buyers in other countries. This boosts global demand, as investors and even central banks around the world rush to buy more gold. This perfect storm, rate cuts, a weaker dollar, and global uncertainty has sent gold prices soaring in 2025, breaking records and drawing in new waves of investors. Lower Treasury yields are just more evidence that investors are looking for alternatives. When yields fall, it's a sign that people are willing to accept less return for safety, and gold fits that bill perfectly. Investors everywhere are watching these signals closely. For many, it's a green light to move money into gold, hoping to protect their wealth from whatever comes next. The logic is simple. What's bad for the dollar is often good for gold. When the dollar stumbles, gold tends to shine. It's like a global chess game, with every move by central banks, governments, and investors affecting the price of gold. The stakes are high, and everyone's watching to see who will make the next move. In a world full of uncertainty, gold is the star player. Reliable, resilient, and always in the spotlight. That's why, when global jitters hit, everyone's eyes turn to gold. Let's look at the numbers and see just how extraordinary this year has been for gold. The precious metal has always been a barometer for economic uncertainty, but 2025 has taken things to a whole new level. As of September 30, 2025, gold hit an astonishing $3,115 an ounce. This isn't just a new high, it's a milestone that's captured the attention of investors, analysts, and even those who've never considered gold before. That's up $1,150 from a year ago, a massive surge that's left many market watchers stunned. In just 12 months, gold has added more value than it did in some entire decades. Gold's up over 25% this year, smashing through previous record highs and rewriting what many thought was possible for the metal. The rally has been relentless, with barely a pause for breath. This kind of rally creates FOMO, fear of missing out, on a scale rarely seen in the gold market. People are rushing in, eager to grab a piece of the action before prices climb even higher. Social media is buzzing, and gold investment apps are seeing record downloads. What's driving this surge? Global uncertainty, inflation fears, and currency volatility have all played a part. When the world feels unpredictable, gold shines brightest as a safe place to park your money. But it's important to keep perspective. Gold's long-term average return is about 7.9% per year, while stocks average 10.7%. This year's gains are exceptional, not the norm. Gold's main role is stability, not explosive growth. It's the asset people turn to for protection, not for making a quick fortune. Other metals like silver and platinum have also risen, riding the wave of investor anxiety. But gold remains the safe haven king, the standard by which all other precious metals are measured. The 2025 numbers show investors flocking to gold in uncertain times, seeking shelter from the storm. Demand is surging not just from individuals, but from institutions and even central banks. But remember, past performance doesn't guarantee future results. Just because gold has soared this year doesn't mean it will keep climbing at the same pace. Don't let the excitement blind you to the risks. Gold can be volatile, and prices can fall just as quickly as they rise. Always consider your long-term goals and risk tolerance before jumping in. Gold's story is about protection, not just profit. In times of turmoil, it offers peace of mind and a sense of security. Keep that in mind as you watch the headlines and consider your next move. So, how do you actually buy gold? The classic way is physical gold, bars or coins you can hold. It's tangible outside the digital system and feels secure. But storage and insurance are real challenges, and dealers charge commissions. Gold jewelry? Beautiful, but not a good investment. You pay for design, not just gold. When you sell, you'll likely get only the melt value. Physical gold is disaster insurance, not a get-rich-quick scheme. If you want direct control, it's an option. But be ready for the logistics. It's the oldest way to own gold, but not the only one. Let's look at modern options. Don't want to store gold bars? Try the stock market. Gold ETFs let you buy shares backed by real gold, with easy trading and no storage hassles. They're simple, liquid, and cost-effective for most investors. Or, you can buy gold mining stocks, companies that dig gold out of the ground. When gold prices rise, these stocks can soar, even triple-digit gains in 2025. But mining stocks are risky. Business problems, strikes, and politics can tank them even if gold rises. You're betting on both gold and the company's success. ETFs track gold's price. Mining stocks add another layer of risk and reward. Choose based on your risk tolerance. For most, ETFs are the practical choice. Know what you're buying. Why is gold called a safe haven? It's expected to hold value, or rise, when markets crash. Gold's value isn't tied to companies or governments, it's scarce and durable. It's a classic hedge against inflation. When money loses value, gold often rises. Gold also diversifies your portfolio, moving differently than stocks. When stocks fall, gold can cushion the blow. In 2025, investors want stability, not just growth. Gold is a financial anchor in a storm. Its psychological comfort is powerful. That's why it endures. Now let's talk risks. Gold's price is volatile. It can fall as fast as it rises. If you buy at the top, you could lose big. Gold pays no income, no dividends, no interest, no rent. You only profit if someone pays more later. That's pure speculation. Gold mining stocks add business risks. Futures contracts add leverage and complexity. If the economy stabilizes or rates rise, gold could drop sharply. The same forces driving gold up can reverse. Investing in gold is a bet on continued uncertainty. If the world calms down, gold's appeal fades. Know the risks before you jump in. Here's the bottom line. Gold's 2025 rally is driven by fear, falling rates, and a weak dollar. There are many ways to invest, but none are risk-free. Don't let FOMO or hype drive your decisions. Never put your emergency fund or retirement savings all in gold. Gold can be a small part of a diversified portfolio. Think 5 to 10%. It's insurance, not a magic bullet. Do your own research and know your risk tolerance. If gold's volatility keeps you up at night, reconsider. Don't follow the crowd or internet gurus. Gold is just one tool in your financial toolbox. Build a strong, balanced plan for your future. Make decisions calmly, not out of fear.